Oil prices managed to win back some early losses from yesterday's session and edged up by 5%. Despite a moderate rise in the morning trade, both benchmarks remain pressured by the imbalance between demand and supply in the oil market. Surprisingly, the Russian ruble performed better than expected yesterday after the oil prices collapsed. On Tuesday, the ruble opened the trade in the positive territory. At the beginning of the session, Brent crude managed to climb off its previous lows and settled above $23 per barrel. On Monday, however, the benchmark retreated to as low as $21 a barrel. American crude was quickly extending gains in the morning trade, having advanced by more than 5%. West Texas Intermediate settled above $21 a barrel. It benefited largely from yesterday's phone conversation between US President Donald Trump and his Russian counterpart Vladimir Putin. The leaders discussed the impact of COVID-19 and the current situation in the oil market and agreed that the top energy officials should find the way to stabilize oil prices. Traders are now focusing on the talks between Russia and the United States. It's widely expected that Washington will try to force Moscow back to negotiations with Saudi Arabia. Any signs that the two major oil producers may soon stop the price war could contribute to the oil's rise. But as for now, Brent has no obvious reasons for settling above $30 per barrel. At the same time, the market can be highly volatile today as oil futures contracts will soon expire. The ruble started the day in the positive territory. The dollar-ruble pair was trading at 78.42, having gained 1%. The background factors still call for a cautious opening of loan deals. On the chart, the sideways channel is being formed. The prices seem to find support at the level of 77, where the level of 80 will serve as a resistance. The current rate of the ruble is mainly supported by foreign currency interventions introduced by the Bank of Russia. Besides, the ruble has benefited from the data issued by China. Market participants are pleased to see the China's industrial sector reopen after a massive shutdown in February caused by coronavirus outbreak. During today's session, the dollar-ruble pair is likely to go below the mark of 79. However, this may be a short-term trend. Despite a moderate recovery today, the ruble closes this quarter with the biggest losses in 6 years. The Russian ruble plunged by 20% against the US dollar due to a massive drop in oil prices and coronavirus impact. Today, the emerging market currencies, including the ruble, could be influenced by high volatility at the end of the quarter.